presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Having a little problem with the chart, but let's just go through this. Dow is up 205. What I was looking at over the weekend, I showed my subscribers to you. I'm going to show the charts whether or not they come up. Is that the arch formation that was formed from the big drop from the Dow, the 26th of January at 26,616, over 3,000 points to 23,360. Yes, it looks like an internal low that we're making a very big arch formation. We're into 25,800 back on the 27th of February, pull back on Friday to 24,217, trying to bounce, and went lower today. And this is very interesting. It dropped down. 24,217 was the low on Friday. Today's low was 24,387. That's only 160 points up. I mean, 300, yes, below the Friday close. But now we are 205 points higher. So it's over a 300-point rally. What I was looking for is a bounce, and I've drawn it into this chart here, the daily chart. The 9-period moving average of 24,910 to the 20-period moving average of 25,025. That's kind of what I'm looking at, and that would be the resistance. It could even go higher. That was a very oversold condition. However, when I went through all the different weekly charts over the weekend, showed my subscribers to my opening call, what we were looking at, the technicals were very, very weak, and this allows for a bounce. I'm treating it as a bounce right now. Whenever we have a move like this, I said to myself, you know, you wanted to go long this morning, but then you didn't want to confuse the issue between a shorter-term trade and then have to reposition yourself for the short side. Let's just wait before shorting. And, of course, now I'm saying to myself, well, why not just get into the trade and then just see where it goes and make the switch when you have to? Anyway, that's the way it is. We have a couple of long positions that are doing very nicely. And we've got one short position, which is still just a very poor-looking chart. All right, let's get to the nitty-gritties here. Let's just run all these since it's the first day of the week. The Dow has support now, 20, that's the E-mini. Well, the E-mini is showing, and you can't see it, so let me just change the chart. After the break, I think I'll be able to get back that. I don't know what's happened. It shows that the camera's on, but the camera's just not picking it up. So, right now, Dow's at 24,730. Key support is the 24,570s to 24,610s. And resistance is at 24,908 on the bigger scale. But on a very short-term basis, I would say that the 24,750s to 70s will be today's very strong resistance. S&P. S&P right now trading at 2714, up 23. Made it just like the Dow, made a peak C in a big arch formation. This one held the Chapman wave falling X support line, and then it broke a little under it. Now it's way above it, and it's touching the 9-period moving average at 2714, and that makes it right here 26.96 is the key support, and resistance to me is the high bar of the first, which is at 27.30. So that's looking out a couple of days. And I think there will be a bit more of a bounce. Now, looking at the QQQ series, nice action. Actually, even Friday was pretty good action. So it's up $1.60 at 167.59. Very mixed market here. The different charts are showing different aspects to the daily charts and the weekly charts. So now you've got the falling axe became that declining trend line from the high of 170.95 on the 26th for the QQQ power shares trust series. That's become support, and there was only a peak C, but it was a gray C. I'm expecting this week that at least there's going to be a test of the old high, 170.95. Doesn't have to get there. I'm saying a test of that area. So going into the 169, 170 period price. And the weekly chart is actually looking not bad at all, and monthly chart is still good. 120-minute chart has just gone to a leg A, the gray A. Now let's go to the IWM. The IWM, as I was looking at over the weekend, I was fascinated by the fact that it held better than the others. It was weak. It got to a peak D sooner, and it's having a nice move up, 0.78%. It's at 153.55, up $1.20. Held the 9-period moving average. Charts will come soon. I hope so. I'm saying that. I'm anticipating during the break I'll have just enough time to reboot. Okay, so the weekly chart is okay, but not great on the IWM. I think it's got a lot of resistance in the 153.90 to 154.20 area, and the support at 152.20 needs to hold. Gold. Gold is actually not bad. It's down 2 at 13.21. Trying to get off the ground here. It's interesting. Some of the gold stocks actually held pretty well, doing not bad today. We decided we would go with the gold stock in this particular period because there's just enough conflict to say people might be looking at an alternative sector. So I think gold might be it. We don't know. It's just the start of an attempt to move higher. Look at the silver is, the charts have been diverging a little bit. Silver's weak at down 0.03 at 16.43. It's a weaker looking chart. You just need to have silver pick up very strongly, get into the 17s, and then I think you've got a big explosive move up in gold and silver. Until that happens, chop sideways. If you look at high-grade copper is right now, it's just trying to rally a little bit. It's up 0.03, 3.12. It's in a trading band. That's all I can say. If you look at the dollar, and that's going to be very interesting, the dollar is tried to rally earlier. It's kind of failed. It's gone under the 9-period moving average. I've been looking at this as an arch, an H pattern that goes to a lowercase m with a bigger second arch. That's what we're looking at. Dollar needs to hold 89.40. It breaks under that. That's very poor action. This is the continuous contract. And the 90.30 area to 90.70 will be the next resistance. Looking at crude oil, that's going to be fascinating. Yeah, with crude oil up $1.43. Rallying weekly charts. I'm just thinking trading band between the 65s resistance and the 59 support. We'll see if it's going to really continue higher. It's a leg D in the 120-minute chart. Let's see what happens tomorrow. Meantime, back at the ranch, the TLT is down 32 cents at 118.03. I showed my triple yield chart to my subscribers over the weekend. I explained exactly what we've got. We've got 3 different letters in the weekly chart. Let me see if I can get this now. I'll go there right away. I won't take out the other. Here we go. So the long-term, this is my longer-term chart of the triple yields. What we were looking at before was that the 30-year, the white TL, the TYX had in fact gone to right there, had gone to a peak C and has pulled back. This is the second week of pullback, although it's up 24 cents today, but it had made a peak D confirmed in the 10-year, the brown one, the TNX, and the cyan one is in leg D. So there are mixed signals right here, but all of them are pointing to higher yields to come over the next couple of weeks. I'll be back. I'll try to get out of these charts and refresh to see if that back up.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, everyone, we're back. Charts are back. Everything's set. So let's just go here. On the E-mini, on the 2-minute chart, we just made a peak D right there. Peak D. See the arch over, slow move to the downside. But in fact, this looks more like a rectangle consolidation. And we're looking at the 5-minute chart, made a peak F, and you're pulling back a little bit, and a leg D in the 10 minutes. So I think we're in for a little bit of a rest here, and then we'll see what happens this afternoon. Brings us being 20 past 12 Eastern time. I'd say by 1:30, we've already had a very oversold condition unfold. There should be some news that says that the tariff is just part of the art of the deal, and that what will happen is that there will be tariffs for the country that the administration deems necessary to have tariffs with, and that the others who are really basically economic friends will survive very nicely. So that I think that's what's happening here, and that's just kind of what's happening. But the monthly chart is really the big issue. How do we handle the next week or two as it relates to the month of March in these key indices? So a couple of questions I had. Let me just deal with them now. I'm going to get out of this. We'll come back to it a little later on. I don't usually have 4 windows up at the same time. That usually creates some kind of a problem. So let me go back to this. I wanted to show you something. Out, damn spot. Okay, there we go. So you can see that the E-mini right here is starting to pull back a little bit. No big deal. Still having a leg D in the daily. That should have been. Why is it so slow? I don't like that. Okay, so now hello. I should not mess around with. Oh no. Oh yes. Where did that go? All right. I'll be back in a second with the right chart. Right side, left side. What happened to? Oh, I have to go to the open desktop. Give me a second. Desktop. We'll go to the one that just closed down right there. All right. We're coming back. So within the context of the markets, what we're really looking at is there's sector rotation still going on. And I think until that sector rotation is complete, we won't get the next leg down in the market. And that includes the fact that the semis are still acting very well, and certain parts of the XLK, certain parts of the tech sector are doing very nicely. What I am looking at here is that the steel stocks are still holding pretty well considering what's going on. And I will see within about another 4 or 5 days just what happens with the steel stocks. Have they been buoyed because of an artificial hook that's been thrown in there? Or is there really enough? Is it going to turn out to actually be a negative in the shorter term for the steel stocks? We'll see, because these are only words and you get reaction, you get emotional reactions. I want to see what happens in terms of the SLX, for instance. Now, I wanted to also look at and talk about that within the context of the yields. We've still got the chance at a leg C, maybe a peak C in the weekly chart of the TYX, the 30-year, that there will be a new leg to the upside. Now, I wanted to get out of that, and I put in exit. Do I do that, or do I just keep going? Let me just keep going and see if I can get everything okay. So bonds, you can see, trying to rally and sort of finally making an H pattern off the bottom of 116.51 in the TLT. Look at this. The TBT is, look at that. Nice bounce, but it made it peak D. In fact, now I have no choice but to put in a down arrow, which says the TBT is in a sell mode in the daily. Weekly chart still very strong. It looks like it wants to still make that leg D, right? And the 120-minute chart is holding quite nicely. So yields are still saying to me that there's a very good chance that yields are going to go higher over the coming week in March. Let's put it that way. Now, I needed to, did crude oil, did that. What am I missing? Oh, I'm missing the fact that I wanted to show the ESH18, and it was a question about the wave count. One of the Chapman waivers mentioned to me. So I've got this. I spent quite a bit of time trying to assess exactly what. Once in a while, you'll get a recycle because there's no other way to count it, and to the downside, and you suddenly get stuck at a B or a C. It just doesn't make a D on the downside. However, look, you've had a beautiful, let me open this up. This is the 120-minute chart. This is still March. Look at this beautiful arch formation. The left side, right side, price time match, and bam, exactly in the midpoint, it comes down, breaks the low of 2703, goes low, and then finally goes to 2647, round number high. It's had a bounce in this cup formation, and it's gone right to the 200-period exponential moving average, which is at 2718 to today's high, 2716.25, just under it. And I've got this as a B. I'll call it a gray leg B because the stochastics needs to be nicely above 80%. There's a 79%. I can change that, but I'm not going to do it yet. Stochastic is important if it flattens out, which I think it might do. But the MACD is rallied quite nicely. Still way below where it was at the high of 2789, but at 2718, MACD is good. So I'm going to be watching this because what I would normally do while I'm trading, I draw in my next arch because there's always a fighting pattern on the way up. And we'll see if there's a fighting pattern at the 200-period resistance, the EMA, and this high that was made at noon on the 1st of 2731. So these are the parameters I'm watching right now. So let's get out of that. Now I want to go to some other things that I was asked about. First question that came up was Boeing. Well, Boeing, BA, is trading right now. It's down $1.81, a better candle than it had on Friday in looks, but it hasn't gone to a higher high and it hasn't gone to a lower low. It's an inside bar so far. So it made the peak D top of 371.60 on the 28th. A leg D, still a leg D in the weekly chart, and a leg E in the monthly. I'm suggesting to you that if you look at the PPA, which is the, right there, Power Shares Aerospace and Defense ETF, that we've made a high of some significance on the short term, not the weekly yet. And that the weekly is going to tell us a tremendous amount. It's trading at 56.85, down 9 cents, had a high just under 59. 58.97, I would say that's just under 59 on the 27th of February. I'm watching this double top in the daily and a potential double top in the weekly very closely. We've got the whole of March to get to 58.97. Sorry, 58.97. We're at 56.65. If we don't do that, we've made a peak D, and that could be quite significant for the first time. But I don't see these as major sells yet. I do see that the PPA has the potential with Raytheon making a top at 222.27 on the 27th, peak D in the daily, peak E, perhaps if no new high this week in the weekly, and leg E in the monthly. I think at least sideways consolidation. And that's going to be very interesting. First sideways consolidation is in quite a while. Basil Chapman, Tiger Technicians Hour. Dow's up 167, S&P's up 19. I'll be right back. I hope to take you.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So this is what I was looking at. I had a couple of questions about this. The schematic that I've got here with the lowercase h is what we're looking at. And what I decided was in the Chapman wave, because this was such a severe, almost like a single leg down, it was a brief little trough A before gapping down to the 24,232 low that was made, 24,217. I meant to change that. 24,217, right there. And I've decided to call that an X in my work in the Chapman wave 5. And now what I'm looking at is there's a chance, and I've drawn it in, that we're going to get a leg. This is I'm calling this for now 1. I could make, I'm going to have to spend some time. This could be 1, that could be 2, this could be 3. My thinking here is it's 1, and that we'll go only to about a C in the arch that I'm anticipating. And that arch should go above the 24,000, what is it, 856 20-period exponential moving average. That's the green line. It might even do that after a pullback in the 120, this is a 120-minute chart. You can see the MACD is turned up, but it hasn't crossed positive. The stochastic's acting very nicely. It's gone from the low that was made. It did get down to, where am I going to get it? On balance volume. Ah, slow stochastic right there. It did get down to the 11% area. It's trading now at 23%. I suspect when all said and done, eventually it's going to go to 9%. But this bounce is very important. I'm treating it as a bounce. And you've got this whole containment area here. 25,043 is the 200-period exponential moving average right there. The orange line in the right side chart of the 120-minute. Same thing. This is just with the MACD and stochastic added and a couple of different trend lines. So that's what I'm anticipating, and I drew it in the daily. I exaggerated a little bit just to show it's a directional thing. It's not exactly a price move, but it was up here. And I've got this going into about the 8th, what are we today, 6, 7, 8, Wednesday or Thursday. That's where another test of the bear phase comes in. That's what I'm thinking. Now, I probably should have, the reason why I put it over there, 2 reasons. One is, should really be about here on the line. One is I want you to at least give it a chance to say maybe you'll still make a D. I don't think it's going to do that, not this particular pattern, but I just wanted to give it the opportunity. So now what I'm looking at is that within the context of the bounce, I don't think it's going to take as long. This is going to be just a counter trend bounce. Hey, completely wrong. If we have another burst of energy today, and today the Dow goes from the high in the 24,000, what was the high? 24,755 area. We're trading at 60 points lower. If it goes from this phase, has another extension like a 2 or 1. We haven't had many of those for a long time on the upside. We've had quite a few on the downside. A 2 in 1 day, where the price at about noon, about lunchtime, gets doubled to the upside. We've had a couple of those to the down. We've had maybe 1 or 2 to the upside. So I don't know if this is the phase yet that we've got enough strength for that, but I'm not ruling it out. So let me go clearly. The Dow at this point is up 168. There's a chance that you've got another couple of days of bounce, and it'll be between 24,900 and 25,050. That's where I'm anticipating that we have a reversal. We have on the downside, treating this 25,800 as the high in the daily chart, a 1, Chapman wave 1, we completed the 5 at 25,800, and now we've got the 1 bouncing to 2. There should be a low of 3. Doesn't have to be in my work, but it's the way it's calculated. But below 24,217, I don't know what's going to do it now. It's going to be a lot of disappointment. Then it bounces again, and then 5 comes back for that retest of the area in the 23,000s. 23,600 to 23,300. So let's get back to the nitty-gritties. Sector rotation I mentioned. Look at the IBB. IBB had a very nice day on Friday. Having a nice day today, up 82 cents. This is the IBB NASDAQ Biotech ETF. The all-time high that was made back in, oh, it's split, that's right, at 133.60 in July of 2015. It plops down to 80, and now it's bouncing all the way back to 110. This is a nice move, but it needs to really break decisively above 111.94, the high of the week of the 2nd of March. 2nd of March? Oh, last week. Oh, 2nd of March. It has to really close in the 112.50 or higher area. And then I'm going to say to you, aha, now we know which sectors are going to find the rotation. Why? Are there tariffs in the biotechs? You know, in a way, the kind of tariffs, the tariffs are actually passing your different levels of execution and confirmation for passing tests. So I don't see it quite the same. I think that the IBB could, in fact, be an area of at least cover, as if the other sectors of the market pull back. The SLX, which is the steels, having an okay day today. It's down a penny at 49.27. But this, I think, is going to be a little tougher because there's a lot of responsibility, there's a lot of implications. Steel tariffs can lead to trade wars, or they could be just the perfect thing right now. We'll find out how it's dealt with. Is this just the opening gambit, and now you're going to negotiate? I suspect yes. So I'm expecting that steel actually holds up okay. How much does it break to the upside? That's the big question. Looking at different sectors, if you look at the SMHs, SMH right now, good action. I think it's going to go to a leg D at 107.67, and that will be an extension of this leg in the weekly chart. Is that an F or a brand new A? Or if it comes in Monday, is that a new G or a B? So I'm liking the action. We don't have a position. We have no shorts. We have no longs. I'm kind of just watching it for big clues. And I suspect that the SMHs are going to be one of the areas we look at. Look at the XLK. Not quite as strong, but still acting quite nicely. Made a kind of a V-shaped pattern with a little V handle. We'll see if this can keep going all the way to Thursday. And that means it needs to go to 69.20 as the very long-term, the 26th of January daily high, 69.19, pulls back to 60.97. So that is a 9-point move. So that's what, 13%. Now it's rallied strongly to the 69.71 all-time high in a peak D. So will this make a Chapman wave falling axe formation? I'm watching this closely because if the XLK only in leg C in the monthly chart, but leg, I'm calling it D for now in the weekly, if it's able to get to the 71.70 to the 71.30 area and hold there on a closing basis by Friday, I have to admit, I think we're looking at a sideways time consolidation, very selective move to the downside, but certain sectors still carrying forth on the upside. So this is going to be very important for me in the XLK, the S&P Select Spider Fund. I want you to look at the Euro, EUR, USD as we go to the break. Euro, it's balancing quite nicely. It has support, it's at 1.23, has support at 1.225. If it breaks above 1.240 this week, that's going to be very good in the USD JPY. We'll look at that. Pulling back. I'll be back. Basil Chapman, market conditions out. Down's up 187.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, Basil Chapman. So the dollar, Japanese yen currency pair, nice day today, up 34 cents at 106.05. Just saved the day. I tell you, if it closed under the low of Friday, I would say, gee, that really disturbs the monthly chart, weekly chart. The monthly chart doesn't look good at all. But you have to get the daily to go to the 107s, and it needs to do it by Thursday to save the day. And I'm looking at the weekly chart, and it's a flat stochastic at 10%, and the MACD is not very good. So this is a tough one. Other than to say, using the double top, double bottom formula, this is closing above the left side low of importance, the low that was made back in February on the 20th, and that was the 16th at 105.54. We're trading at 106.07. So if this is the case, that if the dollar-yen currency pair, let's call it the yen, manages to rally, it needs to get above 106.56, the 9-period moving average, probably 156.70. And then by Thursday, it needs to be up in this range of the 107s. If it's able to do that, I'd say that's the short-term reversal, but I would have to put it together with the dollar. They don't necessarily trade together anymore, but the dollar is not acting all that well after the big move up from the 88s into the high 90s, and now it's just stalling at 90.02. That weekly chart needed a follow-through week, and we'll see if it gets it this week. And it's really gold, which I think has a little bit of strength, just as a diverse a sector that is independent in a way of the market for many people who go into the gold stocks. So we'll see what happens. Meantime, back at the ranch, had a question about, someone was asking a question, a new trader who's not that comfortable yet, looking for advice on building a strategy, has very little experience. So I'm going to make it real simple. Listening on TFNN. Try to glean, just to kind of garner a few little tidbits that just stick with you. I can't tell you what's going to stick with you because I don't know where you've been, but there's a chance that there are certain techniques that someone will talk about, and you'll say, hey, that's a technique that I use. What did they do that could add to it? But I'm going to make it real simple, just in terms of the way I look at markets. Let me just go back here. You see, in the Chapman wave, what we look for is the most identifiable low bar and try to count the waves from there. See, this is the E-mini. I don't know if you trade the E-mini, but whatever it is, it doesn't even matter. You look for the most identifiable low bar. It means you might have to wait a little bit because it has to come off and then retest and maybe move higher. I use the MACD and the slow stochastic as two. I put the MACD here in the below the price, and then the stochastic below the MACD. Specifically, there's a reason for that. I like to see a particular technique. You see this, what I call the squash, which says, wow, this is going to be a buy signal that goes to a buy mode very quickly. The implication is it should go to a C very quickly. Then the stochastic starts to pull back, and that's the torque from the stochastic. The MACD, this green line, keeps the price going. That's the momentum. That's the overdrive. That's the thing that keeps the power. It holds the power. And that takes you then to a D. And that's what we just got. And the D's really, you can practice going to D's, and then you could get out. And then look, it goes to D sometimes, even goes to E and an F. But D is really the objective. So that's one technique. Another technique that you can use is if you just use the slow stochastic, when it comes from under 20% to over 20%, that's just a clue to say, hey, I think there's a chance that it could actually go, the price could go higher. And the other is if you put it together with the MACD, you want the MACD to show you follow through. That green line is the 9-period differential of the moving average convergence divergence, the MACD. And then look, that has followed the price. That's what you want to be seeing. Does the price follow with the MACD's 9-period differential? I also use some other techniques, but that's really kind of easy. If you're looking at something, let's just say, yeah, you're looking at gold right now. This is the daily. I like to have the weekly and monthly all in one segment, one window. So the first panel has the daily, then the weekly, and then the monthly. If you look at the daily, it's coming off the low. The MACD is starting to flatten out. Stochastic's turned up, but not very strong yet. Price is holding okay. I want to see a decent price that gets into the 1335, 1337 level, and it's trading at 1320 right now, and it needs to happen quite soon. If it does that, gold can have a pretty nice bounce. But let's just say you're not trading things that have, you're not looking at the futures, you're looking at the actual prices of stocks. Let's just go, I had a question about, say, Target. Let's go to Target, TGT. Trading. So the first thing I do is I say most identifiable low bar. I always screen to the left. So this is an alternate count A. There's nothing after G in my work. It means you have to rename it. So this is an instant restart. There you go. So now it gets a little complicated, but I'll just do this because I was asked about it. Chapman wave instant restart in a peak D, and within 2 bars it goes. Within 3 bars it goes to a new recovery high. So that's E/A, F/B, G/C. So let's just call it for now because we know it went high, and it went to the D. There's that D that I keep talking about, the 4th highest peak. Other things can happen. Pulls back sharply, goes to a low. You can count this, but it's only a B. Usually if it only goes to 2 troughs on the way down and they're quite sharp, you can have a pretty big bounce, and that's exactly what happened here. And what are we always looking for a D? Lowest low bar, just above 68. Around about February the 5th, it goes peak A, peak B, peak C, peak D. I have a CD book called Introducing the Chapman Wave Methodology, and it goes through all these different things in great detail. Now, so Target in the daily has gone to a new peak D, and the weekly has gone, there's the D right there. It's called the floating letter until it makes the peak. Gone to a D, and it hasn't gone beyond that. So the question is, where is Target? Yes, it's looking fantastic considering it went from under 50 to over 75, to 78 actually, and now it's trading at 74. But it looks a little tired. And I'm just suggest to you that when you see stocks that have really gone this high, this is not what you want to be trading if you're a newbie. You want to be looking at, what was the question before? Hair, H-A-R. Question about hair. Could I do an analysis? So let's look at the weekly chart. This is look, there's that lowest low bar. Now it's gone to a peak A, a peak B. Why is it a peak? Because it had a lower high bar for a full bar. So that's a B. I put a plus sign. I haven't really got a signal to say this is a buy signal to buy mode. It's also an IPO. This is not what you want to be trading. If you're a newbie, there's just too many hazards attached to IPOs. So look, left side low bar right there. It makes a new low right there. So here goes A. I must double check. Yeah, I don't want to do this too quickly. high of 424.29. Okay, so here's your new trough of importance. That's the start. It goes to never skip a peak. That's a peak right there, that little thing, B, and now we're in C. So we're in a peak C in hair, HAIR, trading at 595, up 61 cents, up 11%. Do you buy it right now? You know, for the person that asked me the question, this is your kind of stock. I like it. I'll talk about it as soon as we get back. I'll be right back. Dow's up 211, S&P's up 23. We'll be right back. Basil Chapman, Tiger Technician Zone.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. We're back. So we've got Jennifer from Idaho. Hi, Jennifer. How are you? Whoops. Uh-oh. Jennifer, are you there? Oh, I think we lost her. So, Jennifer, I'm sorry I didn't get you. I misread what was mentioned to me by my engineer. Could you call tomorrow? In fact, call me first thing tomorrow on my show if you're able to, and we'll get right to it. Great questions, and I'd like to deal with it with you so that I know where to go from, and I can give you some kind of a map, some kind of a plan. And we'll look at stocks that have already moved or about to move, etc. So I don't know if you're there. If you're there, just yell hi. I guess you're not there. But Jennifer, call again. I appreciate it. Okay, folks, let's just do this now. So I looked at hair, and I'm saying to you, hair looks like if it didn't make this move today, I'd say, uh-oh, you got to hold off just a little longer because we want one big candle. Today's the candle. So this is for the person who asked me about it, because you look at longer term themes. This is a theme here. I guess they got some restoration hardware. No, Restoration Robotics, Inc. I look at this and I would just start a small position if you don't have anything right now. But realize it's an IPO. It is in a product that has not really been tested in the marketplace as I can see it. I'm talking about the stock. But it's a startup position. And I'll look at it maybe again in the next 2 days. The other thing is Square. Square's had a spectacular move in leg D in the daily, leg C in the weekly chart, and leg E in the monthly. Square Inc. point of sale software, managing receipts, trading up 3.34 at 49.36. This is really nice. In leg D, this makes it tough. Maybe tomorrow I'll try to get to that as well. So we've got our week cut out for us. We've got a nice move to the upside here. It's a bounce. I'm treating it as a bounce based on the weekly charts. A lot of repair work has to be done. But it doesn't mean to say we have to break the low of the 9th of February. But it does say, I'm watching. I'm going to talk about it just one more time here as we're about to close out the show. Look at the monthly chart of the Dow and the S&P. See this candle here, the Chapman Wave Roman candle? Well, we haven't had a weekly close under 12,300 yet in the Dow. If and when we do, watch out. We're going to be going down to test the 9-period moving average of 23,900 and the low that was made of the 9th. Meantime, this is a bounce. Treat it as a bounce, as a way to go. Thanks for being here.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The